Awesome. The band would have
We
played.
just like
Oh, hey! Welcome, everybody. This is Dumb Investing. That guy over there, that's Harry.
That guy's Lloyd, and it's about to get dumb up in here. My very first intro.
Yeah! Check that out. All right. You've happened to all 17 loyal subscribers. Thank you so much. The rest of you, welcome to the Dumbest Investing Show on all YouTubes. Normally, we'd be rolling dice, picking random stocks, and going and wasting our retirement money. But the market kind of sucks, and we're kind of run out of money. So, yeah, we're not going to do that tonight. What we will do, though, is we're going to review our portfolio. We're going to do follow-up from some of the stuff we talked about last night. So we're going to go over what the FOMC is. Why are the markets?
That was perfect.
Is that what an FOMC? What is the F? Yeah.
OMC.
And why JPOW demands the market do nothing for 2 days while they wait to hear this full speak. We're going to talk a little bit about what they're doing. So it's going to be a great night. We're going to have a whole lot of fun. Let's check out our stupid portfolio. And if it's down as much as my personal, I'm going to be sad again.
All right, here we go.
Oh, we have quite some green. That is a good change.
We do have some green. There's more green than reds. Unfortunately, the percentage-wise, there's a few more percent in the red than there is in the green. So on the loser side, we have shocking. I know,
well, they were the top of the winners yesterday, so they should be the top of the losers today. That's how they go.
BurgerFi.
I'm going to start day trading them tomorrow. That's all there is to it. I'm going to YOLO the savings account and just start day trading BurgerFi.
BurgerFi down 2.8%, and GFL Environmental Holdings down 2.5%. On the other side, on the winners, we've got the 3 times Industrials Bull up 1.3% and CSW Industrials up 1.6%.
And the depressing part is our blue bars are way up there compared to where those guys are.
Yeah, we don't need to look at those. We got lots of time. Hey, guess what? We've got the next 6 months after JPOW comes out and does a little chitty chat tomorrow. Rocket
well, if he does it right, we'll talk about this here in a minute. Everything is going to go up. Life will be great. We'll be rocking it.
Totally.
46 cents for the day. Oh,
So,
yeah.
Yeah, I guess that's the cumulative P&L. So we're up 46 cents over the last 5 trading days.
Ticker, we're never going to be able to retire at this rate.
That's so true. So true.
Oh, wow. This is awesome.
It's been a pretty wild year, though. I mean, we're talking COVID. We're talking things that people haven't dealt with in hundreds of years. Well, 100 years.
Yeah, I mean, it's been nuts.
Yeah, totally. We're also talking about record-setting markets. But like we talked about yesterday, that's what they're supposed to do. They're supposed to go up.
All right, so if any of you smart subscribers or NBA viewers, in the comments below, tell us what your thoughts are. What would you do with this crapshoot of a portfolio? Would you start selling your losers because opportunity cost? What would you do? What are your thoughts? That I'm kind of leaning towards opportunity cost. Those losers just sitting there losing every day. Get tired of waiting. I want to be a trader, not a waiter.
Patience is a virtue.
I know. You're my yang to the yin. Okay. So yesterday we talked with London a little bit.
I want to be the yang.
We were talking about spending and things like that. So I did a little bit of homework for 2 reasons. Number one, to kind of see, why is the market kind of stagnant? How important is what Jay Powell is going to talk about tomorrow? So here's what we've got going on. We've got this thing called the FOMC. And the FOMC is the Federal Open Market Committee, of which Jay Powell is the president? Chair? So, yeah, whatever, something like that.
He's the chair of the Fed.
And what the Fed has been doing for the last, I don't know how many years. I didn't look that up. But they have been putting every month $120 billion into the market. And they're doing this through $40 billion a month is in mortgage-backed securities, and $80 billion a month are in treasury securities. And the reason the market is kind of freaking out right now is that is a whole ton of liquidity that is being pushed into the market every single month. $120 billion. That's hard to comprehend how much money that is. So what they're looking for is they want Jay Powell to come out. They want him to say, we've seen a lot of inflation. We've seen it in the consumer price index. We've seen it in other places. They want him to say, I'm going to hold interest rates. Interest rates are how much borrowers have to pay to borrow money. Right now, they're zero. So you can have all the free money you want, and it doesn't cost you anything. So the Wall Street guys are like, we want to see interest at zero. We like free money. Free money is a whole lot of fun, right? All of us would love free money, but we're not in that special stupid club. What they also want is they also want him to say, not only am I going to keep your interest at zero so you can borrow money, they also want him to say, oh, and I'm not going to stop giving you $120 billion a month to go poof away at whatever you want to. So they're going to want to hear him say, hey, I'm keeping spending where it is.
Stocks.
We're not going to ease or taper. If he says either of those two words, ease or taper, the market's going to crash for like 3,000 points tomorrow. It's going to dive. We're going to see it's going to be a dive like we've never seen before. If he doesn't mention taper and he doesn't mention rates going up, the market's going to skyrocket. It's going to be crazy. So here is kind of how this system works. Because I wanted to see exactly how does $120 billion, where does it go?
So this is called something, right? This is called quantitative easing.
That's what some people call it, yes. And basically it is increasing the liquidity of the money supply. When times are rough, like what we went through, the housing crash, still trying to get our economy back. We were almost getting there, and then the pandemic hit. So they want to keep, so basically the Feds, if you can picture the economy as a great big engine, like an engine you see in an ocean liner, huge engine. The Feds are the oil that grease it and keep it going. And right now they're keeping that engine nicely greased and oiled up and ready, and they're just
she's fully lubed up.
Yeah. So here's what they do. They do two things. Number one, they print their money, so they get piles and stacks of money. They also digitally print, and they go in and they increase the bank reserves at night digitally. So basically what that says is the bank goes to sleep. And let's say they've got $100 billion. And when they wake up, they have $150 billion. Nice, huh?
I want that job.
Yeah. So the Feds are stimulating the banks, and the banks are doing two things. So the banks are allowed to invest more of their money into securities. They also have more leniency in loaning that money wherever it may be. Some of it may go to Main Street. Some of it may go to trading. You never know. The Feds are buying mortgage-backed securities. So what they're doing is they're basically going to the bank and they're saying, hey, Mr. Bank, go make a bunch of loans to people. Make sure you do it the right way. Don't do it like you did it in 2008. We caught you on that. We smacked your little hand. Don't do that again. But go make a bunch of loans. We're going to go ahead and buy those loans for you. So what they do is the banker takes and he loans his money, let's say 200 people. They go like ticker, like what I'm trying to do. They go buy a house, right? So they take Harry's loan and Lloyd's loan and they put it in with Bob's loan and Jose's loan, and they do that, and they make a package, and they take that to the Feds and say, here's some loans, do you want to buy them? And the Fed buys them from them. So now they have more liquidity, now they have more money, they can go do it again. And the Feds keep doing it. So the banks are like, hey, this is awesome, man. I don't mind making 2.5%, 2.75%, because my money was free. I don't have any risk. So that's what's stimulating the economy. That's what's driving housing market. That's what's driving a whole lot of things right now. So the whole world is looking at Jay Powell and say, man, if you stop that, what happens? We don't know, but it's going to freak me out. And I'm going to sell my stocks because I don't know. I'm fearful. I'm afraid.
Right.
Look at that. How was that? Did I do okay? Did I
That was
explain
pretty
a
awesome.
little bit? Yeah, I
That was
did some
great.
homework. Yeah.
Totally. That was great.
Well, I
mean,
wanted to learn a little bit.
Yeah, but so here's the thing for me. Regardless of what happens, I ain't selling stocks. Like, as the way that I see it, that's the only hedge, between the two. So we've got physical assets and we've got our not virtual, but you actually own shares in companies, so in stocks. So during inflationary times, it's really good to invest in real estate, because if you can get in prior to mortgage rates going up, you have that basically the cost of that real estate is going to increase in theory at the same rate or more as inflation, but your mortgage rate is not, because it's locked in for that period. In the other sense, I also like to have the stocks because I also feel like they're going to be moving along with inflation, but I guess it depends on what you have, right? And how inflation is going to directly affect stocks, because companies, and here's the thing, is companies always are continuously borrowing money. So when the Fed raises the interest rate, that means the bank is increasing the interest rate, which is increasing the borrowing rate, which is increasing the cost to companies. So they may or may not be able to borrow as much to invest in their companies to be able to grow. So I guess that's kind of the...
Okay, let's stop on that point for just a second. So if you ticker industries.com and you are used to getting very low interest loans to propel your business, and JPOW comes out and takes that away from you, what do you do? Where else can you go to get capital? You go to Wall Street, right?
Right.
You release more stocks. What happens is now you're diluting. So that's why they're afraid that the market may go down, is because people will fear, hey, our stock prices right now are it depends on who you're talking to, but there are people who believe that if you go to old school fundamentals from the 70s and the 80s, price to earning ratios, things like that, stocks are overvalued today. We're no longer following fundamental rules.
Because we've printed 20% of the money supply of the last, in the last 6 months of the last 9,000 years.
Right. So
those aren't real numbers.
No, I mean, but we've printed, there's been a whole lot of, I don't know that you can consider it wealth, but there's been a whole lot of money that has been printed, so that the monetary supply itself has been diluted to some sense. Now, has it artificially increased the stocks? It could have, right? It all depends. There's the other side is, hey, boomer, we don't follow those rules anymore because these companies are different than those companies, and there are different rules that apply. So that for every argument, for every thought you have, there's somebody who is all the way over at 10, and there's somebody who's all the way over at 1. And so, you just have to tread lightly. And the majority of the people think if Jay Powell does not mention interest up and spending down, everything will be great.
Yeah. I think ideally he comes out and says, yeah, we had a 30-second conversation about talking about tapering, but we're really not talking about tapering, because this is exactly what we expected. We expected the inflation rates to run hot for a little bit, and as you can see,
transitory.
They're going to be transitory as commodity costs are now starting to decrease. There's some equilibriums that are starting to happen. Supply chains are starting to, you can see that they're slowly starting to come back, and things will revert back to normal, and we'll hit our expected 2% inflation rate, or 3% inflation rate is what they're trying to achieve, right?
Yeah, that eventually it'll all work itself out.
Because over the years, they've been trying to get over 2% inflation rates for many, many years, and they just haven't been able to achieve it. So they're kind of like, okay, well, let's let it run hot for a little bit, and let's see what happens. But generally, because of the way capitalism works, it's generally, as an economy, deflationary. So Costs typically go down over time as capitalism prevails, just with economies of scale and more consumerism and more competition.
Ticker, have you tried to buy a pickup truck lately?
No, because you can't.
Yeah, but have you seen the prices? They ain't going down, Holmes.
That's true. You're right. But so
no, but in some things they do.
No, wait.
Like when you look at technology, right?
Right, but wait. So this is an interesting concept and something interesting that you bring up. Right now, today, the average age of a car in the US is 12.6 years old. That is substantially older than it has been in previous years.
Yes.
So and the reason is because, well, there's multiple reasons, I'm sure, but I'm going to assume, because it's the same for me, is that you're not out there buying a new vehicle, because if you want to go buy a new truck, it's $80,000 for the base model plus. Yeah, you want something that you can put into drive without having to do something crazy. Yeah, no, well, that option's $80,000, so you gotta pay for that one, right? So more people are keeping their vehicles longer, and yeah, I think as a result of that is that companies like Ford, GM, Toyota, they're increasing the prices because they gotta hit their revenue targets, right? So if they hit their revenue, if they're not doing it in sales volume, they've got to increase the selling price to get their revenue targets, to get their sales dollars still.
Well, on your point, there was some talking head on Bloomberg that said, even though the price of vehicles has gone up, like you were saying, they last longer. They are providing us with better technology. So the value that we receive, even though the price tag is higher, the value has increased dramatically, and therefore it is following those laws. So yeah, that's just a fun tidbit of crap there.
Yeah, and I mean, generally, Ford, GM, all these guys, their cost for that particular truck over the last 20 years probably has not increased the same amount as the selling price.
No, and if you want to see how brutal the car industry is, go pull up Ford or GM and look at their profits.
Yeah, their margins are low.
Oh, yeah. They're, I think, for the last couple of years, under 1%.
Yeah, but they're silly. I mean, go look at the Kias of the world and the Hondas of the world, right? Let's pull them up. Guys that get how to run business. You don't need to have 17 different freaking colors of seats. You don't need to have 14 different interiors. You don't need to have, you can have the wood trim. You can have the gold trim. You can have the platinum trim. You can have, they make it so complicated with the North American vehicles that they are so consumed with trying to give pleasing everybody, and it just costs a fortune. You go to McDonald's lately, and their menu has grown probably, 8 times what it was back when I was in high school 15 years ago. We used to go there, and you'd go and you'd get, you can have yourself a Big Mac, you can have a chicken or a McChicken, you can have a cheeseburger, or you can have some nuggets. That's it. You don't get the wraps. You don't get the salads. You don't get the breaded chicken or the regular chicken or they just overcomplicate it, and it just kills the bottom line. Simplify the process, streamline the process, give the people what they want, because they want a good, high quality product for a cheap price. Honda,
there's a concept, and I forget what it's called, but the reason restaurants do that is they have this because I used to run some restaurants, right? And they have this hypothetical car of 4, and they talk about how one person, hey, let's go to whatever. And that one person in the back goes, well, they don't have what I want. And so all these restaurants are like, we'll just make everything for everybody.
That just kills you.
Like,
you want to go buy a Kia, what's that, Telluride? You can't go buy one now, right? Because no,
you can't get those. Every soccer mom in the nation has one.
Got 2 of them, right? But
I know.
You get a black interior or you get a white interior. That's it. You get it in 6 different colors on the outside, and you get 4 different model types.
Ticker, that's never going to work. People are individuals.
But they're sold out and they're making money.
I know. Have you seen? So Kia has a new minivan, dude, called the Circus or something like that. Surprise? Circus. I don't know what it is. It's called something. It's a freaking cool minivan. I can't believe I just said that, but it's cool.
I think I saw it the other day. I forget what it's called. You should pull it up real quick.
It's got a weird name, right?
Have this conversation. It was kind of funny because we used to have a Kia before we bought our Honda, and we loved it. But when we had kids and we got the dog, so we traded the Sorrento in for a minivan.
Carnival. It's called the Carnival.
Yeah. So we traded all that in. Got the Honda Odyssey, which is great, and then. My wife always wants the SUV, right? Got to have the SUV for the soccer mom style. So we go through all that, and then I see this commercial of the Kia Carnival, and it got this, the dad's driving. Oh, honey, what are you going to do for work today? Oh, or on your day off. Oh, I don't know. And then he hauls out to the back country, and he's got his bike and stuff with him after he drops kids off, right? And I saw that commercial. I was like, honey, look at this. This van is like an SUV. It's like what would you call it? A VUV? A van utility vehicle?
Oh, they have a special name for it. It's the new multi-purpose vehicle. It's an MPV.
MPV. All right. Yeah, when I saw that, I was like, hey, that's kind of cool. Like, why not just make an SUV with sliding doors? That's perfect. But I guess that's what they did, didn't they? An MPV. There you go.
So you want to have fun. Here's some fun. Look up at AMG R63. Coolest minivan in the world.
Oh, yeah?
600 horsepower, all-wheel drive. Oh, my God.
That sounds like it costs a fortune.
It did back in the day.
Picker money for that.
Oh, no. Picker can only dream about having one of those. Yeah. That's what everybody needs, those 600 horsepower minivan.
I don't think so. When you can have You can have a Tesla Plaid that's 120,000 or 100. What is it? 1,020 horsepower, and it just runs on batteries. 0 to 60 in 1.99 seconds. Vroom vroom. You can't tell me they're not going to make a minivan. 100%.
It costs as much as a house.
Oh, well, $120,000. That AMG is going to be that much.
Oh no, because it's old. It's from the early 2000s.
Oh,
you pick one up for 40 today.
What a deal! Yeah, it's only 30 years old,
and it'll only cost you $10,000 a year to maintain. I mean, it's awesome.
Yeah. I can wait to see the Tesla minivan. That's gonna be.
Are we done with stonks?
0 to 60 in 2.7 seconds.
Well, that model is it the X with the cool doors? Mm-hmm. That's kind of a minivan, right?
It's close. Yeah.
It seats like 9 people or something crazy like that.
I think it's 7. But they're. I mean, Tesla needs somebody that can that can design a vehicle that looks like half normal. I thought Johnny Ive was over there from Apple making their models. Everybody's
an individual. Come on. They all want something cool. So are we done with stonks?
That's true.
Because we're at 23 minutes.
Not everybody has the cheeseburger that's not on the menu, I suppose.
Right. I don't know.
Yeah, done with stocks.
So we'll jump into real estate for a second. I lost. Am I on my 5th one now? Got noticed today. Got outbid. I was 5th in line.
I was hoping that you got outbid for that one.
What? That one was awesome. It was 5 houses away from the neighborhood pool. Dude, it would have been so easy to rent. It was only 9 months old. Man. That was one. Had granite countertops. Man, it was nice. But I went in 10% over and I was 5th in line, dude. Got my ass handed to me.
We're going to see what happens tomorrow. I wonder what that's going to do to the housing market when JPOW comes out tomorrow and says, we're good. Keep going. Money printer, go burr.
Oh, it's just not going to stop, dude. It's not going to slow down. Our supply, especially down here where I am, our supply is less than a month and our normal is like 6 months. It's just nuts. So it's crazy. So I have the guest bathroom now has holes in it. The plumber's
Oh.
coming tomorrow to figure out what's wrong with. Yeah, my subcontractor showed up tonight. Took the tile off, beat holes in the thing so that the plumber can get in and do his work. So who knows what that's going to cost when we're all said and done. I need 100 square feet of tile, and then he's going to fix that, and then we'll worry about the other stuff later. So yeah, so that's a fun thing. Still got the bullfrog sanctuary out back. Haven't seen my pool builder in a month. The water's slowly evaporating. We're down to, I think there's only 4 bullfrogs. We had 8. I don't know if Hawks got them or what, but the sanctuary, yeah.
Get the snakes in there.
Oh, dude, that is my fear, is that one day I wake up and there's a copperhead swimming back and forth in there.
No
and then
doubt.
I'm going to go to jail for discharging a firearm in the city limits.
Not just a regular firearm. That M16 is going to be all over that.
Oh, so yeah, that's what's going on in this world.
Oh yeah. The over here, what did they do today? They came. So finishers came yesterday. Today, the final mudding. So any of the marks that happened in the walls and everything. And because apparently when you choose a dark color, you see everything, which is going to be awesome for the kids down in the basement. So yeah, like my kids never damage walls or anything, like for sure, right?
No,
never put dents or holes and stuff. So yeah, I'm learning all of this now that, it's a little darker, and they're like, oh, if you just went one shade lighter, you wouldn't see any of this. I was just like, oh, God.
Glad we had this talk earlier, boys.
Yeah. So I was talking to basically the general contractor, who's kind of the drywall guy as well. And he's like, yeah, we learned a lesson on this one. I'm like, oh yeah, what was that? Yeah, we're going to ask now going forward what color we're putting on walls, so we know how much work it is. Like, oh, sorry. So yeah, they put a lot of mud back on the walls today.
That's crazy.
Yeah. So coming tomorrow, final sanding tomorrow, should be final paint Thursday. No, what day? Yeah, Thursday-ish. And then
I still can't believe they're doing all that with brand new carpet in there. That's crazy.
Yeah. I'm surely hoping that they're going to clean it all up.
All right. Well, fingers crossed that JPOW says what the market wants, and we continue on the ride we've been on. It's been a decent comeback since the spring. We had our peak, in February? Little dip in the springtime. We're just now getting out of it. At least I am personally.
Is basically been straight down since February, and then about April. We just say April 20th, probably 420 was about the day where things kind of turned around.
420.
Everybody got high.
Yeah, you Canada guys picked that date on purpose, huh?
We don't run the stock market.
No.
We only call them
weed up
them.
there.
Yeah, crazy amounts, apparently. I don't get it.
Oh, all right. We're at 28 minutes. Your camera's going to shut off here in 30 seconds.
I just reset it. I wanted to go through an episode where the camera didn't shut off, but I don't know if I hit the button or not. So we should probably stop, because otherwise it'll make me look silly again. All
right. Well, let's hope that JPOW does his thing. Do all the YouTubes down there for us. We'd appreciate it. Leave us some comments if there's topics you want us to talk about. We like doing some research. We like doing homework. We like learning. Hopefully we can help you all too. When you're out there and you're clicking our Webull link and you're putting $100 in and you're getting 2 free stocks valued at up to $1,800, whatever you do, don't trade like that guy over there.
I don't even know which way to go. Don't trade like that guy, Adam. and we'll cover off what JPOW said tomorrow night, and we'll see what the stock market does. It should be a very interesting day, so make sure you guys tune in. I think it'll be great.
Yeah, we'll do it. We'll do a wrap.
It'll be fantastic.
And hopefully we do the portfolio review and it's all through the ceiling. So, hey, everybody, have a good night. Thanks for joining us.
Oh, yeah, we're going to triple the portfolio tomorrow. Of course, right?
Clearly. Sell it. Let's start rolling dice again.
Good night.
See you guys.